guys, it's Stock Curry, and it was kind of a weird day in the markets on Monday. The markets overall were up, even though most stocks were down. So I'm going to talk about the news that affected a couple different stocks, and I've also got an update on 9 different stocks for you guys. So let's get into it! Alright, before we get into the stock-specific news, I want to talk about the markets overall for a second. And I just want to give you guys a reminder that a stock market correction is still on the horizon. There are a lot of indicators that we are really, sadly, in the period that we were in like 1991, 2000, that time right before the NASDAQ went down like 40%. And so it's really, honestly, kind of scary to me that we are in this situation with these overly high PE ratios and a lot of other indicators that are pointing to a market correction on the horizon. In fact, Julian Emanuel, who's a longtime bull, came on CNBC today and he said he predicts a 10 to 20% market correction in the month of September. And of course, September starts tomorrow. And September is historically the worst month in the stock market. And so there's a lot of things that are just coming together, all pointing towards a possible correction in September. So just keep that in mind and be wary of it and just hold some cash on the sidelines so that you can weather the September storm, and hopefully we get through this correction and you have plenty of cash ready to go to buy the dips in October or whenever this market correction happens to be over. All right, we're going to get into the stock-specific news during the stock picks portion of the video, so let's get right into the stock picks. For those of you guys who are new to this channel, my name is Stock Curry. I used to work as an analyst for some large investment banks, and now I analyze stock picks on YouTube. Every day, I watch hours and hours and hours of YouTube videos, and then I consolidate all of the stock picks from the top YouTubers, and I put them together in a single video. I give you both the cliff notes on their stock picks, as well as my analysis on their stock picks. Now, if anything I talk about today piques your interest, make sure you listen to who I say talked about that stock, and then go watch their video to get the full details on what they said. Now, all I ask for putting all of this together for you guys is that you hit that like button, subscribe, and follow the page so that you can get notified when I release my next video. In fact, I'll give you 5 seconds to do that right now. All right, before we get into today's stock picks, I just want to remind you that I am not a financial advisor. Nothing I talk about today is a recommendation to buy, sell, or hold. These are just my opinions, which may or may not be accurate. Please do your own research before investing in any assets. By the way, if you're wondering what you're looking at right now, this is the Webull desktop app. Webull is the app that I use for my trading, and it is also the app that I use in all of my videos. If you'd like to get 2 free stocks worth up to $2,300, you can sign up for Webull using my link in the description below. When you sign up using my link in the description below and deposit just $100, Webull is going to send you 2 free stocks worth up to $2,300. All right, let's get into today's stock picks. And first up is AAPL. This is Apple. Ken and Grace let us know that AAPL hit a new all-time high on Monday after news came out that they will be adding satellite service to their iPhone 13. That means that if you are in an area with no signal, you will still be able to make emergency calls and send short text messages using satellites. There are a number of satellite companies that might provide this service. One of those is GILT Satellite Networks, ticker symbol GILT. Another is Globalstar, ticker symbol GSAT. GSAT ran up 64% on Monday on rumors that Apple might work with GSAT for their satellite service. GILT did not run up, however, so GILT might be an opportunity to make money if Apple decides to use GILT instead of GSAT. Apple did not announce who they are partnering with yet, so any potential deals are just speculation at this point. I would not buy GSAT right now since it ran up so much on speculation already. In fact, GILT is already down over 9% in the after hours on Monday. But GILT might make for a good buy. Just keep in mind that GILT is a huge company and the deal with Apple is probably only going to represent a small portion of their overall revenue. Also, regarding AAPL, this did break out above resistance on Monday and might continue running higher on Tuesday and Wednesday. It's more than likely that AAPL will retest the resistance level of $150, which by the way is now the support level, before running higher. So if you are interested in investing in AAPL, I would try to buy this between $150 and $151. Next up is BABA. This is Alibaba. They are the Chinese version of Amazon. Both Tom Nash and Jeremy with Financial Education discussed whether or not now would be a good time to buy into BABA. Tom Nash said BABA is a great company with a lot of risks. The risks are so high that BABA is trading at 1/3 where it should be based upon the fundamentals. The main risk that Tom Nash sees is that Alibaba has gotten so big and powerful that the Chinese government might be inclined to hurt the company and even the economy for the sake of maintaining their power. Jeremy with Financial Education also sees risks in U.S.-China relations and the fact that China is currently cracking down on internet companies. And both Tom Nash and Jeremy listed the VIE structure as another risk. If you can live with those risks, though, BABA is severely undervalued and you might make a lot of money off of it. Jeremy with Financial Education pointed out that there are 50 analysts covering BABA. Of those, 45 rate BABA a buy, 4 rate BABA a hold, and only 1 rates BABA a sell. Now, specifically looking at the fundamentals, Tom Nash compared Alibaba to Amazon. BABA has a PE ratio of 19, while AMZN has a PE ratio of 58. EV to EBITDA is 17 on BABA and 29 on AMZN. Jeremy with Financial Education also let us know that the forward PE ratio on BABA is only 17. BABA is down 44% over the past year and is a screaming buy. Jeremy said this is a deal still, and Tom Nash said this is a major discount. You just have to decide if the risks are worth it. For a lot of large institutions right now, the risks are not worth it, which is why the price is so low. And both Tom Nash and Jeremy said they would not be investing in BABA right now either. Next up is CHPT. This is ChargePoint. They're the largest charging station company in North America with 73% of the total market share. They are also starting to expand globally. Chris Zane gave a $21 buy-ender price on CHPT. I will remind you of my buy-ender price of $23, my ideal buy-in price of $19, and my stop-loss price of $18. I think CHPT will do well in the long run with the infrastructure bill getting passed this year and Democrats in control of the United States for the next year. CHPT is scheduled to report earnings Tuesday after the market close. If anything, I would expect CHPT to rise after earnings given how much it is already beat down. Next up is HOOD. This is Robinhood. Keena Grace explained why HOOD was down so much on Monday. The SEC chair told Barron's that banning payment for order flow is a possibility. If payment for order flow is banned, that is going to put a serious dent in Robinhood's business, since that is how they make money on stock trades. If you don't know what payment for order flow is, it's where your broker will sell your order to another party, such as a hedge fund. That other party will then make money on the bid-ask spread. This can lead to your orders not getting filled at the best prices. Now, the good thing about payment for order flow is that it makes commission-free trading possible. Without payment for order flow, there would be no commission-free trading, which means you would have to pay $5 or so every time you bought and sold a stock. That's how all brokers operated until Robinhood came along and changed the game. Now, if you don't like the idea of payment for order flow, since it allows hedge funds to make money off of you, then you can sign up for a paid brokerage service. Interactive Brokers Pro does not use payment for order flow. So if you want to sign up for Interactive Brokers Pro and pay a small fee to trade, then you can bypass payment for order flow and get the best rates on your trades, while having control over where the trade is processed in the market. If that is something that interests you, I have a link to Interactive Brokers in the description of this video so that you can check it out. Next up is LCID. This is Lucid Group, and they're an American EV manufacturer. Stockmo said he bought LCID on Monday. LCID has been beat down quite a bit over the past month, and now it is very close to the 300-day EMA. LCID is very close to where it bottomed out in the middle of May. It is getting close to oversold on the RSI, and I think once LCID hits the 300-day EMA at around $19.25, that it will bottom out and start going back up. Tuesday or Wednesday will probably be the best day to buy LCID before it starts going back up again. Just be aware that a new possible downward catalyst needs to be considered for LCID. LCID hit a price level that allows Lucid to recall their warrants if they want to. If LCID recalls their warrants, that means warrant holders will need to immediately exercise their warrants. That means they will need to bring cash to the table to convert those warrants into stocks. If they are unable to do so, they will lose the value of the warrant. Doing so, though, will cause the shares outstanding to rise significantly, possibly by as much as 40 million additional shares outstanding. That will put significant short-term downward pressure on the stock price. I say short-term because it will also generate between $500 and $900 million in cash for LCID. That is cash that LCID will use to expand their production facilities and scale their deliveries. So in the long term, it will be beneficial for Lucid shareholders, but in the short term, the stock price will most likely drop. Again, this is only an option that LCID has at their disposal. They are not required to recall the warrants. They just have the ability to. So just keep that in mind if you invest in LCID. Next up is TSLA. This is an American EV manufacturer. StockMo said he bought more TSLA on Monday. TSLA continues to maintain its long-term upward trend line. Again, TSLA has significantly slowed down in growth and volatility and is now just going up slowly, much like a blue chip growth stock. So I would not buy options on TSLA, but this would be a good stock to hold long term. StockMo reiterated his year-end price target of $900. Personally, I think that's too high though, given how TSLA has slowed in growth. My long-term trend line has TSLA ending the year at $835. Looking even longer term than that, Chris Sain gave a $1,500 price target, but he failed to give a timeline on that. I'm sure TSLA will get to $1,500 eventually. I'm just not sure if it'll be 1 year, 5 years, or 30 years. And last up is TTCF. This is Tattooed Chef. They are a plant-based foods company and a competitor to Beyond Meat. Jeremy with Financial Education compared TTCF to its peers to determine whether or not TTCF is a good deal. He compared TTCF to Beyond Meat, ticker symbol BYND. Jeremy also compared TTCF to OTLY, ticker symbol OTLY. He showed how BYND has a forward price to sales ratio of 13.7. OTLY has a forward price to sales ratio of 16. TTCF has a forward price to sales ratio of 7. That's half of where BYND and OTLY are valued. Now that's the only comparison Jeremy with Financial Education made. But just based upon the forward price to sales ratio, Jeremy sees TTCF valued at less than half of what other comparable companies are valued at. By the way, for those of you wondering when I would be getting rid of my calls, I wanted to let you know that I still see quite a bit more upside potential for TTCF. The RSI is only at 59, the MACD is still negative. So TTCF could easily get to around $23.50 before topping out in the short term. Long term, TTCF is maintaining its long-term upward trend line, so I think TTCF remains a great long-term hold also. Alright, I hope you enjoyed this video and get a lot out of it. Go ahead and comment down below what your thoughts are on a possible market correction. And if you're looking for a broker to trade with, you can sign up for Webull using my link in the description below. When you sign up for Webull, Webull will give you 2 free stocks worth up to $2,300 when you sign up using my link and deposit just $100. Now, again, if you don't like payment for order flow, or if you're not a US resident, then you can sign up for Interactive Brokers. Interactive Brokers is a great trading platform. They have highly discounted trading, both in the US as well as throughout the rest of the world. And of course, both Webull and Interactive Brokers offer the full pre-market and after-hours trading from 4 a.m. until 8 p.m. Eastern Time. And I do want to remind you that I have material connections with both of those, so whenever you sign up for either one of those brokers, not only are you going to get a great broker to trade with, you're also going to help me to continue to produce these great videos for you. Now finally, I want to remind you to hit that like button, subscribe, and follow the page if you haven't already. I hope you have a lot of success trading, and I will see you tomorrow.